But what I didn't foresee happening was when those stockers escalated like that, then it just kind of energized the sale barns as a whole. And so you saw all the weight classes.
Hi, everyone. This is Matthew Kruse. I'm filling in for Marlon Bowling, who's out on vacation this week. I have with me Eric Relph, branch manager there in Royal, Iowa, our headquarters at Comstock Investments. How you doing, Eric?
Good. How's it going today?
Good. So you is it still pretty wet up there? Here in central Iowa, we've had a little bit of moisture.
Yeah, I mean we've had some decent rains. I think the last one we got, I dumped out a 1.31 on like Tuesday or Wednesday. So it was a nice shower. Kind of got things slowed down where guys were getting their production turned in for crop insurance and kind of catching up on the paperwork side of things. But then back out to work, whatever still needed work. And actually, we were making a comment the other day. There's still some combines rolling on a few fields within a few miles here of Royal. So not quite done and hoping for a little break in the weather to finish up. For the most part, I think has been the story.
Now, why are they still running? Just the moisture level is too kind of running too high.
Yeah, it was running too high, and they didn't want to pay to dry it.
Sure.
Yeah.
Okay. Well, I know we needed the moisture. It was so dry, but I don't know that it's completely eliminated any drought risk at this point. So I mean, an inch probably soaked right in.
It was gone immediately, and there's. I would say Eric Snodgrass is probably the most followed weather person in the ag industry today. And I think he's starting to lean a little concerned as far as the long-term setup. But, they've been trying to outguess El Nino and La Nina for decades. And here we are again trying to say, well, the indicators would say that there's a high chance that we have a serious drought problem next year. But that's next year. So right now the market's unconcerned.
We've talked about that in the past. Or my David Kruse has certainly talked about it for years in the Comstock report about the Elwin Taylor's 89-year drought cycle, and that takes place in 2025. I can remember him talking about it for at least 5 years, if not more, about that. And here we are. We're on the precipice now. But I've heard other people be like, you can't trade that. It's impossible to trade. What do you do about it? Right. So is it just a talking point for now, or is there something that we can do?
I mean, there's long term. I have some cattle feeders that feed a ton of corn, and I mean hundreds of thousands of bushels in a given year, and they're putting some fire insurance in, buying some calls way out of the money, deferred stuff, July, December of next year. So there are some things you can do in case of a catastrophe in that regard, and corn prices going to the moon where you're stuck with these high priced cattle and now all of a sudden you're feeding high priced feed. So there are some things that can be done along those lines, but from a grain marketing standpoint, I don't think you can get too ambitious from these price levels, especially not knowing if this is going to come through or not.
The big discussion or focus this week, of course, is the soybeans, and as Brazil's kind of on the tail end of their planting season. And we talked about this earlier in the week. I didn't look at it, but, we probably gave up maybe 30 cents or so in the bean market. We had a little bounce today. Is that just temporary? If we get to Sunday night and the outlook is for more rain in Brazil, what happens?
I think that's definitely one of the big looming factors. I'm going to go ahead and pull up a chart here right quick, if you don't mind, and we'll take a look and see. If I get off the monthly, that might help. But I had put these chart studies on here earlier. We had the low from August. This is the January bean chart. You had the low from August providing bottom end support. We got very close in overnight and early morning trade here. Then you have this downtrending resistance, trend line resistance here. And so we've held here. Now what? Are we going to run right back up here to this trend line of resistance, or are we going to trickle off here and then maybe work our way up? And $10 is the best we can hope for a few weeks from now. Obviously, we don't know, but I would say that today was probably nothing more than profit taking after a huge drop off over the last 3 sessions from 10.12 down to the overnight low at 9.75. So you're talking a 37-cent drop off or something along those lines. I mean, that's pretty remarkable in 3 days. And so profit taking in the week, not too big of a surprise, been anchored by soybean oil market angst over, are we going to get 45Z guidance? And if we do get it, is it going to be supportive? And is Trump going to uphold whatever they come through with by the end of the year? Or is he just going to negate it come January or February? You've got the Brazilian crop, better than I do, 170 million metric ton potential there. This is just, it seems like one factor after another: high carryout, high stocks to use ratio, Brazilian production, tariff potential, trade war potential. It's just never ending. It's going to be tough to fight it.
If we could take one more look at that
Yeah,
chart, you had a momentum indicator down there at the bottom, and that's something that caught my attention. I don't know if you put a lot of stock in it or not, but is
yeah,
that it's a little bit small on my screen. That's a RSI
correct. Yeah,
indicator. Now
relative strength index.
we didn't quite make a new low here, but we came down and we're flirting with it, right? But
Yep,
yet the RSI did not move down. So that to me that would indicate it's some sort of a little bit of a bullish divergence,
correct.
and that's something that as I'm maybe more of a technical trader than a fundamental trader. It's
Yep.
just something that I would look for that, hey, that's might give us a little bit of support. Now, that doesn't mean we're going to go back and make a new contract high or anything, but it would indicate that there's maybe some support, based off of the RSI
Right.
indicator. Do you have
Yeah,
any more
absolutely.
you want
I
to
mean,
add to that?
you're making new lows for the moves in the futures, but you're not making a new low for the move in the RSI, and stochastics would kind of indicate something similar. And so, yeah, there's definitely a little bit of a bullish divergence here, but I don't know how much that's going to be good for. Like I said, does that just kind of grind higher until we run into new trend line resistance at 10.15 or $10 down the road?
I
Uh,
think fundamentals are eventually going to win out, so it might
yeah,
just buy you some time. Maybe that's all
yeah,
it does, is it buys you some time, takes
yeah.
you a little bit close to that upward trend line there.
Yeah, and the new crop, I mean, this is the November 25 chart, and it looks even worse. From the same standpoint, you can take that prior low and see that we took that out on a closing basis yesterday, couldn't even get back to it today. And yeah, I mean, in the next couple of sessions, you could get back above that, especially if the old crop could be the leader. But then again, where are you going to go to? I mean, maybe you get that November back up into the 1025 to 1040 range before you hit trend line resistance over the next week or two, and then fall off again. So there's going to be some active marketing opportunities here, and unfortunately, that may be the best we can do for the short term.
Earlier in the week, we were talking a little bit about, or you were talking a little bit about what you were seeing in the spreads in the corn and how they've narrowed a little bit. I mean, explain that to our audience. What do
Yeah.
you understand when you see that? I guess.
So typically, that's an indicator that the commercials are short bought. They're not getting the amount of grain now that they want now or need now. In the case of ethanol plants, obviously, ethanol grind's been at an all-time high. The demand is huge, and so they're trying to get that supply in there. So what do? They bump the front end, right? And we saw that even in the case of the December March spread, that thing narrowed from over 20 cents to under 10 in a matter of a few weeks, and that's a pretty remarkable move, especially just immediately post harvest. So what does it tell us? Well, it tells us that the demand is strong. First of all, that's the biggest indicator, but also it presents an opportunity for anybody who's been in the December contract to, okay, instead of costing me 20 or 22 cents to roll to the March, now I can do it for 9. That's 4 months of storage or 3 months of storage for 9 cents. That's pretty cheap. And so it's kind of worth holding on to that long position for those that are in that camp, and roll it to March at a much better value.
I was gonna say I thought like it got as wide as maybe 25 cents at some point, and then you said it's narrowed down to 10 cents. And so what's happening is the March contract is starting to gain on the December's. That's what's happening as the commercials are bidding up and needing the
Well,
corn faster.
the December is actually gained on the March because they're trying to buy now for
Oh,
December.
correct. Yeah,
Yeah, yeah,
December's gained on the March. Yep.
yeah, yeah.
Okay.
So immediate needs are the big story right now, and they're fighting for it. And I think a lot of it has to do with the Mexican purchases that we've seen in the export front, and so they're trying to stake their claim to as much as they can, so it doesn't get sent down the river or down the rail, as it may be for the case of Mexico. But now a lot of concern that buying is going to dry up, and so trying to take advantage of this spot here to get that roll done, because this could go the other way quickly.
One more comment on grains, then we can switch to cattle here. But I think it was in the report this morning. Justin wrote about how well our corn exports were doing, and they were maybe 30% or so ahead of last year at this time. I don't have it in front of me, but it was something like that. It was something
Yeah,
considerable, and so it's and typically this is the time of the year when Brazil kind of controls the global export market. And here it's uncharacteristic that the U.S. is doing as well as it's doing. And so that makes me believe that there's hope here for some sort of post-harvest rally yet, or sometime into the winter. But at the same time, it seems like we're talking gloom and doom here on the soybeans. And so, is there any hope for the corn? I guess. I mean, how far apart can they go in different directions? You know,
Yeah.
where you have this big crop in soybeans in Brazil, but yet our corn exports are excellent, and no reason to believe why that's going to change anytime soon. You know, at least not for another 6 to 8 months, I suppose. You know, or are the beans just going to drag the corn down with it?
You know, so far they've been unable to do that, and I actually wrote about that in this afternoon's report. You have inverse chart formations here. You have an ascending wedge pattern in the corn. It just can't quite get broke through that 434 mark basis December, versus the descending wedge that we already highlighted on the beans. So you have exactly opposite chart patterns. You have kind of opposing fundamentals for the short term, at least. It seems that you know, we would expect to be making the sales to China this time of year. We are making pretty good sales. The last few months have been really nice, but the corn has been a surprise. And so we're seeing this surprising demand for corn. Again, they're fighting it. They're pulling the spread together. All that's happening that we already talked about. And so I think that there's got to be a point where they will fail to divorce from each other, which is what we've seen so far. And I can only hope that maybe Brazil runs into a little bit of trouble, although we can't see it now, at some point in the next month or two, where the corn can actually get a breakout and pull the beans with it rather than the other way around.
We hope so. So,
Mm-hmm.
so cattle on feed report just came out here maybe 25 minutes ago. I don't know if you had enough time to look it over and digest it.
Yeah.
What did you glean from that?
I didn't have a lot of time to digest it. I haven't got into the devilish details, but I was able to at least get a look at the surface. And I guess I wasn't too surprised. Maybe the market will be surprised, but the way that they've bought into this thing over the last couple of weeks is just phenomenal, especially in the feeder cattle. And the expectations today for 103% placement with a range of 101 to 107, I thought was a little ambitious. I figured the number would be a little higher. It ended up coming in at 105. So the placements were a little higher. And what I kept trying to remind people was this report is what went on in October. And in October, we had really no substantial wheat to put stockers out on. There was no grazing wheat available. And maybe some of the native forage was a little thin. Then you get meaningful rains throughout the central U.S., and I've highlighted that in the drought monitor a couple of times in my premium videos in the mornings. And all of a sudden, you've got reparations to a lot of these grazing areas, and then people went hot after the feeder cattle. And so now I think we're going to see lower placements because there is other places to go with these cattle. But in October, that was not the case. So higher than expected placements, that should put a little bit of pressure on the market, especially in a market that's been bought up so hard over the last couple of weeks. And maybe we'll actually see a little bit of a reprieve here, a pullback retracement of some sort to give this thing a little bit of a breather before we get going into late next week and see any cash trade develop.
Before we started to kind of record here, you were talking a little bit about past year conditions and how that was going to affect the feeder market. What do you maybe run through that again so that the rest of our audience can catch that?
Yeah. So I had been talking about, you know, the wheat was just sitting dormant. It was planted, but it wasn't doing anything. And then once the rains moved across that area, I thought they're going to get super energized to buy these stockers. So lightweight calves were going to be through the roof, and they ended up doing that. But what I didn't foresee happening was when those stockers escalated like that, then it just kind of energized the sale barns as a whole. And so you saw all the weight classes really getting juiced up. And now we've got the highest feeder cattle index, CME cash feeder cattle index that we've ever had. And so it needs to take a breather. Once that wheat gets stocked, then they kind of start backing off. And we started seeing signs of that in the last 2 days. The real-time index from DB Auction, National Beef Wire, finally started to pause a little. I would say plateau, not really turn back by any stretch, but at least we're starting to see signs that maybe they're losing a little of the euphoria and that wheat stockers are maybe getting on the tail end of purchases right now. which would be normal. You really want to have that done by Thanksgiving. And obviously we're close to that. So I would say things will start to simmer down a bit. And now looking forward to next month's cattle on feed, we're probably going to have a lower placement number because we do have the moisture, we do have the wheat, and these pastures have had time to repair.
Final observation is it seems, we continue to maintain our strength in the cattle market. It seems to me, and this is just my random observation, that it's somewhat correlated to what the stock market is doing and the stock indexes, because you have the occasional pullback, but and we've been elevated for a long time, but we still seem to come back, and so they're both markets doing the same thing. Do you think there is a correlation between the two?
Yeah, absolutely. There is. The old adage was that, or the stories I was told was that those pits back in the old days were next to each other. And so when one would get going and everybody's buy, then they're feeding off that, and literally looking across the room going, oh, we should buy. And so the cattle would do whatever the equities were doing because they were literally right next to each other in the same building. And so now there's just some kind of a mental correlation between the cattle and the equities, but it definitely does make a difference. And we've seen that throughout this entire run. I mean, the stock market bull run has been, you could almost lay those charts over each other, and any pullbacks are super shallow. You just get these little reprieves, and then you go right back up and make another new high again. It's uncanny, honestly.
You're making me think back to my youth. I used to be a runner on the floor at the CME back when they had the trading pits. I'm trying to think back how close they worked together, because I'm sure I delivered some orders in the livestock pits at one point, but I can't remember how close they were.
Can't remember the proximity.
Yeah. But it's kind of dating me a little bit. So
yeah, I was going to say I'm not old enough, so I wouldn't know.
Thank you. All right. Well, you have anything else that you want to end on today?
Not really, other than we need to keep a close eye on these grain markets. If we push back up towards any of this nearby resistance, even looking for 10 or 20% sales for new crop, we got to keep that in mind. But other than that, I think we'll just have to see if maybe some war tensions escalate the wheat or crude or both markets, and maybe that'll underpin any of this grain weakness.
Well, good. Well, thank you, Eric. If any of our viewers are interested in trying out some of our premium content, you can go in comstock.com and subscribe to the first month for just $1. So we have a lot more written and video content than this. What we do here just kind of barely scratches the surface. So
sure.
Thank you, everyone, and have a good weekend. We'll catch you next week.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.